And then you'll find a lot of people, you'll find a lot of New Yorkers here. They actually have this thing in the summer. Of course, they didn't have it last summer, called Bronx Day. And
Bronx.
yeah, believe it or not, it's like a weekend, and everybody from New York, it seems like, comes to celebrate Bronx Weekend. I think it's Bronx. I think it's called Bronx Weekend.
Hey guys, I don't want to
We're ready.
interrupt your Bronx love, but I just chatted up for 3 minutes, so go ahead.
We're ready.
Till 7:10.
Oh,
You got
okay.
3 more minutes, so
Oh,
chat
okay.
up, and I'll jump back in and start. We're
Start
going to
time.
start off with Marvin's case, but I'm hoping everyone had a chance to go through the booklet a
Yes.
little bit.
Yes.
Yes.
All right, so we might be able to run through it and finish this segment tonight, you think?
Yeah.
Yes.
Yeah, we go fast.
Woohoo!
Yeah.
All right, y'all sound like y'all ready to work.
We
I
are.
Yeah.
like that. All right. See you guys in 3 minutes.
All right. All right.
All right.
You would be shocked at how many people go to this event and see people they haven't seen in years
Forever.
because they didn't realize the person moved to Georgia as well.
Well,
So,
I honestly don't want to see like my sister's lived in Florida, and she was like, there's a lot of New Yorkers here. I was like, yeah, I'm trying to get away from them, not
you're
go close.
so funny. You're so funny.
I
So
was like,
funny.
I like when I was younger, we used to go south, and it
Uh-huh.
was always people like me, like really nice and pleasant and kind.
Right.
And New York, they're not. And I'm like, I like when I get out of here when you have people say good morning for no reason.
Right,
You
right.
know?
Too funny. Oh, okay, but
But it's
no,
true.
but it's cool when you just end up, so just so you don't have just that one friend. So even
Yeah.
it's just a matter of, okay, well, we could link up some other time or whatever. And then you'll find, especially the longer your friends have been down here, you'll find they've kind of grown more accustomed and they've tailored the way they act. So
Okay.
like they don't act like the traditional New Yorkers anymore. And
That's
yeah.
I was like, that's when I realized when I was 12, I
Mhm,
told my mom, why did you bring me to New York?
mhm.
Why did we come here? Why didn't you just pick another state? And she was like,
Mhm.
this is where everybody came. And I'm like,
Right.
I know I wasn't supposed to be here.
Ah, you're like, no, this doesn't feel like me.
No. And the first time I left here was to go, I mean, besides going back to Puerto Rico, I went to Virginia,
Uh-huh.
and everybody was so nice. And there was a lot of trees, and, it was beautiful. I'm like, why are we in this place with so
Guys,
Yes,
buildings
you
all
ready for us?
the time? Yes, it's seven.
yes.
Yes.
Okay.
All right, all right, all right. Welcome back, everybody. Where's Jonathan?
I don't know, but somebody's trying to connect that can't connect. It says connecting to
Let's
audio,
see.
but
Fern is here. Okay, here's Fern. Awesome.
He says he doesn't know if he could make this one because he
Oh,
has some stuff going on over there.
not a problem, not a problem. Chris is here. Good, good. Okay. All right, let's get it started, everybody. So, how did we feel about our little exam last session?
that was good.
You enjoyed it? Learned a lot,
Mhm.
Yes.
right?
Yes.
Yeah.
Okay. All right. So, if you went through the booklet, you should have came upon the case that you guys should be seeing, Marvin's desks.
Yes.
Okay. So Marvin makes and sells writing desk. He wants to borrow $1,000 for a brand new saw and an electric sander. He obtained a loan from the bank and pledges his new equipment as collateral. If Marvin does not or cannot pay back the loan, what will the lender probably do? But let's
Break his
explain.
legs.
Let's bring this more into real life scenarios, all right?
Right.
Because we
Yes.
Oh,
want to talk,
sorry.
yeah, we want to talk real life. So let's substitute desks for a home.
Uh-huh.
Let's substitute desks for a home. The amount doesn't really matter. The bottom line is he can't pay it.
They'll seize your home.
Exactly. Now that process right there is
Or
called what?
foreclosure.
Foreclosure.
Exactly. Now, is that an instant process?
No.
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 Takes a while, right?
Yeah.
Yes.
So in between the time that the client realizes they cannot pay their first month's note, what do you think that client is thinking at that time? Usually they're thinking they can catch up, right?
Yeah.
I mean, that's a natural reaction.
Mhm.
Okay,
Right.
I got a plan, I'm gonna catch up. But let's reverse this. Let's say that client says, wow, I'm in real trouble. I am now gonna seek financial help. What would be, knowing you've gone through the booklet a little bit, you've read a few things, tell me just from your either personal experience or what you read or what you know, what advice would you give to Marvin about saving his home?
Contact the creditor.
Very
Um,
good.
and
Always
let,
number one.
yeah.
What would you tell that creditor?
That you're unable to make these payments, and you to try to come up with a plan on how to pay that amount and going.
Yep. The key thing is when you contact the creditor, whether it's a big bill or a small bill, you must have a plan in mind. Either the plan is to pay or the plan is to settle.
Okay.
Okay. Other than that, well, a home is a different story. We're going to have to separate some debts, right?
Did you see this?
About
You talking
President
about
Trump.
Spurn?
I'm sorry.
Oh,
Am I
okay.
not on mute?
No.
No.
My bad. I was talking to my
All right.
son.
So when we talk about a home mortgage or a car note or what's called a installment loan, right? Those are normally in a separate category from credit cards. Credit cards are a different type of debt. So when we're talking about mortgages and such, keep in mind we're only talking about installment loans. Okay. So now, when you are in a financial bind with an installment loan, that is a totally different process than with a credit card loan. However, the amount is what makes the difference. If it's $1,000 installment loan, you would handle that like a credit card. But when it's like a car note or a home mortgage, you cannot handle that the same way. If you cannot pay your mortgage, that's not the same as I cannot pay my credit card. If you can't pay your car note, it's not the same as I cannot pay my um, Macy's card. The reason why is because the consequences and the harm to your credit is more severe under these loan categories. So the way you handle these are going to be more of the legal nature than the credit card. On the credit card side, everything is already laid out for you. The law makes it very simple on how you handle credit cards. It's laid out by time schedule. It's laid out by amounts. It's laid out by who the creditor is, because a credit card can be sold to a third party very quickly, and then that makes it more manageable, which we're going to get into. So we're going to now go into our booklet. We're going to run through our booklet, and we're going to personalize the debts, and we're going to personalize the cures. All right. So you're going to run into problems, and we're going to create problems, and we're going to figure out solutions and cures, because ultimately these are the cures that you're going to transfer to your clients. All right, so now we're gonna go to your booklet. Are you guys seeing the booklet?
Yes, sir.
Okay, great. All right, so we're gonna run through quickly because all this stuff should be fresh from your exam. Now, anyone that did not make the exam on the last session, I really want to hear your voices on this session, all right? So
Right, just air a brother out, right?
hey, I'm just saying, welcome.
Okay, go for it.
All right.
Mm.
Now, your credit. This is what most people know about their credit, right? So Brother Kenyatta,
hmm
welcome to the group. As we said, just run through those 4 lines as to why credit is important for a number of reasons.
So useful for emergencies, sometimes more.
Let's
Somebody,
stop at each one. It can be
okay, all right.
useful in times of emergencies.
hmm
All right. Can somebody give me an example of how your credit can save the day in an emergency?
Car repair.
Absolutely. Car repair, house repair, that doesn't fall under your insurance, or you just don't want to put it under your insurance because it's going to raise your insurance. Emergency medical situations, travel, you could actually charge a whole trip these days. You could go across the country and not pay a dime till you come back and start making monthly payments.
hmm hmm
All right. Go ahead,
There's
next
so
one.
many,
Absolutely.
emergencies.
So many emergencies. And these are all reasons why it's so important to keep your credit levels up. All right. Go to the next one.
Me?
Yeah, we know that one. We're going to skip that one. Carrying
All
large
right, all right,
cash, large
all right.
purchases. We'll skip that. Okay, next, that one is the last one is a big one.
All right. Prospective employers, landlords, and insurance companies may look at how well you manage credit.
All right. Now, anyone here works for or have worked for a company that required that they check your credit before they hired you?
Yes, I actually work for a company that checks my credit every 5 years.
Exactly. I was definitely
Wow.
gonna single you out, Keisha, because I know your job does.
Mhm.
It's critical that they know how your finances are. And that's
Wow.
because they got to make sure that there's no situation that might pop up where you could be compromised based on your finances.
Right.
All right. So absolutely. Brother Kenyatta,
Mm.
you're amongst a very diverse group of individuals, professionals and otherwise, working on various levels. So everything we do here is legal and up on above ground. All right.
All right. My kind of crowd, right?
All right. Very good. Very good. Okay.
Mhm.
So now we're going to jump through a few things. We're going to run through, like we said, we're going to run down to Marvin. Let's talk about Marvin. So if he cannot pay, we already know what's going to happen, right? In this case, it's actually not that simple, because if you were a bank, what are you going to do with his equipment?
Right.
Mm. Mm. Right.
Right? A bank doesn't have a store.
Right.
So taking his equipment would do nothing for the bank. So with that information, what would actually happen to Marvin?
They put it on his credit.
Absolutely. That's the only thing they could do. They wouldn't even bother taking the equipment. What they would do is put it on his credit, but there's one other thing they could do.
Place a lien on it.
Exactly.
I
Whatever
was
that
gonna
amount,
say.
But
I'm sorry.
go ahead.
I was gonna say, doesn't it depend on? Because, like, if if you're too laxed or not responsible with your car payments, they'll repo your car. So I was gonna say, maybe it depends on what kind of good we're talking about.
Well, absolutely. That's why we
Mm.
separated certain things. When we talk about a home or a car, totally different category, because
Mm.
those have value. Those have resale value, and in the case of a house, it could even increase in value.
hmm But just equipment and other little
There is
types of
no,
things.
there's no, no. no increase in value on equipment that's being used in the workplace. They only depreciate. So if you have a company or a business and you're buying equipment for your business and you spend $100,000 worth you spend $100,000 on your equipment, well, what you're going to do is on your taxes, you're going to depreciate that 100,000, let's say over the next 5 years at least. Take 20,000 a year, off the value each year for your taxes. You wouldn't necessarily put all of it in. I mean, you could, but I wouldn't advise that. I would just take pieces over the course of years. I mean, that's anyway. That's taxation stuff we have to get into later on. But in this case, this equipment would not appreciate, it would only depreciate. So it really would not have a value to the bank. What would have a value is the weight that he puts on his good credit and the weight that he puts on having a lien on his maybe property, if he has property, but whatever he has, there's going to be a lien on it from the bank till he pays that off. He can't make any other financial transactions. And if he does get approved for a transaction, they're going to insist that he pays off his loan or his debt to that bank. All right. You got most of you guys have closed on a home. When you've closed on that home and you go to the bank to get it pre-approved, have you had the bank tell you, please pay off or pay down this debt or get rid of that debt and so on and so forth?
I haven't had to deal with that. I haven't had to do that yet. Out of the
Okay.
homes I bought.
Okay, very good. Very good. That means you went in already prepared. All right. So in the last one, we talked about credit reports. All right, we know what it is. It's a record and so on and so forth. We're going to jump through that. There's some things about your credit report, though, I want to make sure that we are aware of. So we identified that there are only 3 major credit reporting agencies: Equifax, Experian, and TransUnion, right? As far as how they operate, they simply receive information from the creditors. All right. Now, this is what you guys also got to understand. You notice not every creditor that you have may be on your credit report. There are some creditors that choose not to pay that monthly fee to the credit agencies to accept that report. So the companies that you take credit out with may or may not report to credit agencies. Large companies definitely will report to the agencies. However, they may not report to all 3 agencies. Okay, they might choose to only report to 1, or they might choose to report to 2. But unless you're buying a home or a major purchase towards that level, those are the organizations that report or want to see all 3 credit bureaus before they give you the credit. All
Brother
right.
Andy, you got a question?
Yes.
So for people that do credit repair, is that where sometimes a loophole can be found? In terms of like maybe a negative hit on a person's credit report.
When you say loophole, where would you find that loophole?
Yeah, so I'm just imagining. So let's just say you're working with somebody, you're trying to help them repair their credit, and you look at their credit report, you look at which companies that have hit their credit report based on a balance that wasn't paid or something of that sort. And so maybe if you look deeper into the situation, you may be able to see, well, hey, this company reported to Equifax and TransUnion, but they didn't report to Experian, so maybe in some way or another, because they didn't report to that one, maybe there's somehow,
You're
an
saying
ability.
use the fact that they did not report to all 3 to dispute the ones they did report to?
It's something of that nature. Yeah, something of that nature. Yeah.
It doesn't work like that simply because it's a choice for them to report to all three, or even to
Okay.
one.
I see. I see.
It's a
Right. It's not
choice. So
mandatory. It's a choice. I got you.
exactly.
Hmm.
All right. So now, when you look at your credit report, guys, and we're going to take a get a sample look at one later on. These are the things that you will see, but more so, these are the things that you must make sure are correct. Your name, number one. You will see every nickname that you've ever applied for under credit. So for me, for example, you'll have Andy. If I've ever indicated that I want to be referred to as Andy, they'll put Andy. They'll put my real name. They'll put AKA Andy, Andrew, and any other variations that they've ever seen. Or even if someone else applied for credit under my social and totally butchered my name, that name will show up. So when you check your credit report, what you're looking for is misspellings of your name in variations. You have a right to dispute all those and have them removed. Your social security number, you will only see the last 4 digits of your social. It will not show you all of your social. You will verify the last 4 digits of your social. Your current and previous address is very important. It may not have your current address if you have not changed your credit cards over to your new address. If you have not opened up a new bank account under that new address yet, it will not show your new address, but it will show your previous address that you moved from and every previous address before that. I don't know if you guys, those of you that have looked at your credit report, it will show you, and tell me if I'm wrong, did you not see previous home addresses, some that you may have even forgotten about?
Hmm.
Okay, so
Hmm.
it keeps all those information on record for you. So sometimes you'll go to a government website and that website says, I need to verify your identity. All of a sudden, it will pop up questions saying, did you have a home in the mortgage with this company? And it'll rattle off a bunch of companies. If you have ever had a home mortgage, chances are your company's name will pop up on that list and you will select it to identify yourself. If you've never had a home mortgage, you will say none of the above, or whatever the no answer is. Okay, but those questions are directly linked to a credit reporting agency, and they're asking you questions based on that credit report. If you put something on that answer that doesn't match that credit report, it will come back that they are unable to verify your identity and to please call them or whatever the case is. Okay, so your credit report and making sure that these information that appear on it are correct is very important because these are your identifiers. We are unfortunately living in a technologically consumed world, and our identifiers are now, reduced to ones and zero binary codes in a computer system where if they don't match up, we are no longer identified. We can lose monies by forgetting things like passwords now. There was a scenario on the news where this poor person forgot his wallet password for his cryptocurrencies.
Like 280, something like 280 billion or something like that. It was
Some
crazy.
crazy amount. Absolutely. Absolutely. I don't, it baffles me how you could put that money in an uncontrolled system and not be more careful.
Mm.
So that's, and I guess that's why Bitcoin's decided I'm gonna cash him out now that he done gave us all this free money. And then chumped everything. It's like, give me that money. So, okay, oh, sad. I hate to hear that. But
Yeah.
hopefully by, dotting your I's and crossing your T's and keeping safe password in places that you can retrieve them, even though you might have them in a document in your phone somewhere, please keep a paper copy in a safe somewhere, a booklet that you keep safe, just somewhere other than in your phone, because all it takes is you walking through a magnetic field or something crazy that zaps all the information off your phone. Or worse yet, don't keep it on your phone, because there's all kind of electronic thieves out there that can just transfer your information from your data from your phone. So, if we're going to delve into this realm of cryptocurrencies and cyberspace, please remember that there are safety protocols that you want to follow. All right. All right, we're gonna keep it moving. We're gonna try to run through this part. So you have the list. Check all those things on your report, which we're gonna again. Did you guys get a chance to order your credit report? Annualcreditreport.com.
I got 2 out of 3.
Excellent, excellent, excellent. All right. So we are gonna go through those individually. So we're gonna talk about them during some office hours. So, and then you can redact whatever information you do not want to show online. You can redact it online, as a matter of fact, if you've got the Adobe that allows you to do the highlights, and you can highlight it in black and cover all your personal information. If you want us to take a look at it and review it. If not, I've got other samples that we can review, so worry not. But whoever did not pull their credit report, if you have credit issues and want us to address them, please go to annualcreditreport.com and order your credit report so we know what's on your credit reports. It will give you, it's supposed to give you all 3. I hear 2 out of 3. Maybe what happened on the 3rd one? Did they say?
Yeah, no, they said that I didn't verify the information correctly.
Ah, see?
Yeah.
See? Okay.
But I was thinking that was within this time frame in which they're asking. I separated with my ex-husband, so I don't know if he got a loan or what, like what he did or anything, because it was asking me what kind of mortgage or payment or something like that, and I was like, I didn't take out anything at this time, so I have no idea what happened in between.
Okay, so now you might see it on those other 2.
But I did, like, the other ones were fine. The information that I
that you saw is what it is what it should be. Okay. Yeah. All right, very good, very good. So that 3rd one, what you can do, if you want to, if you're curious to know why you weren't able to verify, we can do a hard, what we call a hard request to receive it directly from the company.
Okay.
All right. So we'll talk about that when we talk in one-on-one.
Okay.
All right. Now, this part here, I think this is a favorite for a lot of people because I think it can be misunderstood. Okay. So how many people believe that you can simply choose to do a bankruptcy, and once you choose to do a bankruptcy, that is it? You can just do it?
No, I don't know.
I mean, isn't there like a cost to it or something like that?
Well, cost is one thing, but when you file bankruptcy, the court has the right to review your finances, review your earning potential, and the court can decide not to grant you the right to bankruptcy.
Wow.
How many people are aware of that?
I didn't know that.
Yeah, I didn't know.
Yeah, wow. Didn't know that.
Absolutely.
I knew that. They
I mean,
changed that.
I was gonna say everybody I knew that filed got it.
Well, yeah, because they probably needed it. Because
Mhm.
they probably needed it, and they fit within the guidelines. But there are formulas that, whether you're a business or an individual, that the court uses to determine your eligibility to file for bankruptcy.
Mhm.
It was, and it changed from because the 7 and the 13. Um, I always forget which one is the one that you don't have to pay anything back.
That is chapter 7.
Okay, so yeah, so because it used to be where people were just almost anybody that filed bankruptcy filed Chapter 7, and it was
Mm-hmm.
like, okay, so I don't have to pay. But then, um, like around 2005, they changed the law, and you couldn't now if you wanted to file Chapter 7, you actually had to prove that you had no way of being able to repay your
Mm-hmm.
debtors.
Mm-hmm. Exactly. So there's a test that you must pass to have the right to file bankruptcy. All right. So, and the reason I say that is because a lot of individuals out there, they feel like, oh, you know what? I'm going to run up some debts. I'm going to take out some loans. I'm going to do this, that, and the other, and I'm going to file bankruptcy. But
Right.
it's not that simple, because if the court even just simply decides that you did this deliberately, you had no intentions of paying back this debt, they will hold you responsible for those debts. They will not give you the protection of bankruptcy. So even your intentions at the time of acquiring the bankruptcy is important. All right. And the reason I say that is because if you have a client that comes to you, clients are very honest when they know that you're there to help them navigate what they think they're going to accomplish. So a client will tell you, look, you know, I went to the dealership. The guy told me he'll give me that Mercedes and he'll put me in it and I don't have to put no money down. And, you know, he didn't tell me that my payments were going to be $1,000 or $1,200 a month. And I
Mhm.
tried to keep it up, but shit, now I just can't pay it. And yeah, I'm working and yeah, I'm this and, I got money in the bank, but I'm not going to be paying this car $1,200 and they won't take it back. Whose fault is that? And if you go to court all of a sudden to file bankruptcy and that vehicle is one of those bankruptcy items, well, the court's going to say, well, how much were you making when you got this car?
Mhm.
And if you weren't making enough to even afford that car, then it's like, okay, well, then you had no intentions of paying this back.
Mhm.
And then it's up to the court to decide whether they're going to give you an out or they're going to say, okay, well, you may not file 7 and get away with the whole thing, but I will let you file 13. And what do you think the difference is?
Hello.
Hello.
My fault. I got my
Yeah,
little
that's good.
brother-in-law.
That's good. So based on just what's in front of us, it says the two most relevant types of bankruptcies are Chapter 13 and Chapter 7. You need to have, listen to this, you need to have a regular income to qualify for Chapter 13 bankruptcy.
Ooh.
Okay, so why could a court say no to you filing Chapter 7 and yes to you filing Chapter 13?
Because with 13, you have, like you said, you need a regular income. So what they're going to do is make payment arrangements. With
Exactly.
Chapter 7, you don't have to you don't have to repay.
That's right. So as a financial counselor, when you go to talk to a client and they're telling you that their intention is to file bankruptcy, you're going to put them through your test. And your test starts with their income and their debt ratio. You are going to have that formula and you are going to ask them all the right questions, starting with how much do you make gross? How much do you take home? Now let's start with your rent. your groceries? Do you have children? Do you have a college account for them? Do you have insurance? Do you pay for that? Or is it through your job? You're going to go through everything, cable bills, whatever their bad habits are, good habits are. Do they have a savings account? You got to get all of this information and put it in this formula to see if it's even worth them going to do bankruptcy. Because a lot of times they don't, it'll be a waste of time for them to even file bankruptcy. They will be tying their credit up for a substantial amount of time with I'm gonna put after it says the number of years, I'm gonna put it in parentheses with exceptions, and I'll explain those exceptions later. But essentially, they're tying their credit up for years, and they're putting a red mark on their credit report that's gonna be there for creditors to see every time a creditor goes to give them future credit. So you want to make sure that that client is making the best decision and that you're advising them to the best of your abilities as to whether or not that is a good decision. And for most clients, I will say bankruptcy is not a good decision. They just don't have good money management skills. And once you put a budget together, you will see where they can make
Andy type stuff.
huh?
The straight up real class.
I'm sorry. Somebody was saying something?
No, go ahead, bro. I was talking to Tammy. My bad. Go ahead.
Oh, hi, Tammy.
He
Okay.
said hi, Tammy.
All right. So it's important that you understand how bankruptcy works. The fact that it's just not something that someone can say they're going to do, and it's an automatic thing. And most important, bankruptcy should not be a a uh, a, a budgetary means. Bankruptcy is a last resort. It's like the one thing when all else fails, that's all there's left, then that's what it is. And that just simply means you've given up and you're starting all over. But it doesn't always mean that, because and that's the way the exception comes in. Let me go into what I mean by exceptions. Okay. So we are a financial group, right? Under the AAM subtitle, we are an investment group. Under the nonprofit, we are a nonprofit organization that's a financial driven organization. So if one of our members, for instance, had a situation where they felt they had to file bankruptcy, and if we reviewed their situation and said, okay, this is definitely a bankruptcy situation, what we would do for our member, and this is insider information, of course, but what we would do for our member is allow them to file that bankruptcy. We would even assist them in filing that bankruptcy. But 6 months after they file, we would literally give our member brand new credit. Can anyone tell me how we would do that? We've been talking about this forever, and that we were going to implement this in our organization. It is now here. So somebody should be able to explain how it is we're going to do that.
Give them a credit line.
Okay, that's part of it. But tell me the full picture. I heard something.
I'm sorry.
I heard somebody say something, but it wasn't on here. So say it if you want to say it. You could.
Um. Okay. I know we at one point had mentioned about the trade, and then I know at one some time ago we even mentioned the credit cards
Exactly.
about adding them to the credit card, and that's going to help build their credit and increase their credit score.
Exactly. And if a member has bankruptcy, if they filed bankruptcy, what happens when we put them under our credit score? What happens with that member?
Their credit score goes up.
Exactly. And it changes it dramatically. where that client or member can now go out and live their life unaffected by the fact that they have or had a bankruptcy in their past. That's one of the services that we will be able to extend to members coming into our organization properly and who goes through our credit courses. And after you guys have assessed them, if you determine not bankruptcy, but that they need help in building their credit, and if they have a goal that requires credit, we are here to help them to achieve that. But we are looking to not put them under our personal credit, of course. So that means we are going to put them under a business credit. Are you guys following me so far?
Yeah.
Yes.
Okay.
Yes, sir.
So by putting them under our business credit, which is our nonprofit, we will also be strengthening our nonprofit because we are now gaining membership, and what I'm looking into, which is very interesting, is being able to give credit cards through our organization to individuals to help them build their credit. So are you guys familiar with that credit builders loan?
Is it like a secured credit card or something like that?
Exactly right. So the same way that a credit builder loans work is how we're going to operate that system, where they will receive the credit cards after they deposit a certain amount into their investment account with the company, and then they receive their credit card, and then when they pay their credit card, we list it and it builds their credit because it's running through us. So we'll know all the payments, we'll know when they're late, and if they're late, what do you think we will do?
You could take it. Well, you have the money in the account.
Exactly right. So it will never affect our credit. And if their account goes depleted and they don't replenish it, we will cut that account before it gets to a negative level.
Right.
Okay. So
Hey, brother Andy, you mind me asking a question?
yes.
Okay, so my apologies. I missed the last class. I'm just referring back to the last class I was in. So
Mhm.
so for this particular kind of client, because I just remember like when we first started going through the book, we were talking about, look, the whole subject of investments is not even something that you bring up, when people are in like financial
Ex-
distress or anything
exactly.
of that nature. So is
Exactly.
this particular member, this is a different kind of client right here. This is not something. This is somebody who fits a certain kind of profile
Yep.
to be able to make them a member and actually, take them on in terms of potentially, I mean, by being a member, getting a credit card, etc.
The the
That's
i-
what.
the
Mhm.
ideal candidate for this level of support would be someone who is working. They may not be working and earning the biggest pay, but they're working steadily. They have no credit or bad credit, and they have a desire to either get an apartment of their own and they require a credit score of 650 or better. They're looking to get a better job, but that better job is a little distance and requires them having a car, and they can't afford a car and without financing it, but they don't have the credit to finance it. So those would be the clients that would fit best into that situation because they would need a credit building service.
Ah, I see. Mm, I see. Hmm.
You see?
Yep, I see. I see. I see exactly. I got you.
All right. And realistically, you're going to find that that's about 70% of people.
Right, right. Which is awesome, right?
Absolutely. Absolutely.
It's a
I
huge
tell
market.
yeah, I tell people if people knew the things that you're learning, we would be out of business.
Right.
But that's why we're here, and we will hopefully be here for them. and disseminate this information to them, and it will benefit not just them, but us, because ultimately we're going to benefit from this too. We're going to benefit not just financially, but also benefit from building a network, because what you're now going to realize is so many of the people that you help now will fall into your network of support to go on and do other things, because now the trust is there. They understand that you know what you're doing because they've learned so much from you. You've already improved their life. So why not go the next step with you?
Right.
Right. So you're building a network, not just you're not just helping people and turning them out and be done with them. You want to see them succeed. And really and truly, the best client that you want is the one that has the dream of starting their own business, because that's a longevity client. You're going to fix their credit. You're going to help them learn what it means to run their own business. So they're going to go through the business workshops with you. You're going to show them how to open their bank accounts and separate their money. You're going to show them how to get their loans, and all the things that you're doing. There is a fee attached to it, especially when you get to the loan levels. That's where your money really is. When you get to the loan levels where your clients are now ready for PPP loans and EIDL loans and the other loans that's coming out now through this new government regime. Or when you get to this level, you're talking percentages. Okay, you're making a percentage of the loan. So if somebody wants a $60,000 or $100,000 loan, heck yeah, we're here for you, and we got the resources to get you that loan. All right, but that means money for you. All right. And we're going to break that down, not in this session, but when we get through all of this and we get to now how we make money, this is where we're going to show you guys how that works. All right.
Andy, I have a question.
Yes.
I know you were talking about the adding them on as a to the business. I heard something on
You're
YouTube,
not you're
and
not adding them to the business. You're talking about the people that we're giving lines of credits to.
no, no, no. I'm kind of going back when we were saying like in our circle, if someone needed
You got
to
big t-shirts.
Hold on one second. Guys, if can you mute yourselves, please, while Keisha's talking. Thank you. Go ahead, Key.
thank you. Not not just anybody. When you mentioned about someone in the group, if they had to file bankruptcy, and
Yes.
then just adding them on to the business to increase their credit, to give them a higher credit score. Now, my question is, I've seen this where people are selling their individual, like adding someone to their trade line for maybe 2 or 3 months,
Yeah.
and and the fee is based upon how long you want the
Yes.
person added.
That's the program.
Okay, so here's my question:
Mm-hmm.
if someone, let me use myself as an example. Let's suppose I come to you as a, not part of this group. I come to you, I want to be added on to the trade line, so my credit score can increase. And then I, in turn, go and apply for a mortgage.
Right.
Now, I wouldn't have ordinarily been able to qualify for the mortgage because my credit score prior to getting your services was too
Mm-hmm.
low.
Mm-hmm.
Um, Now, after 3 months, or let's say I say, hey, let me keep your service for 4 months because it's a little bit of a lengthy
Yeah.
process
Well,
sometimes with
and
a mortgage.
we're actually gonna have a minimum amount of time, which right now is at 6 months.
Okay. So then the bank approves the loan because of the
Mm-hmm.
high credit score. Then I
Right.
stop the payments because we've already finished my 6 month obligation with you.
Mm-hmm.
Um, is is there any repercussions to the person, me being the person that applied for that loan with the bank, because the bank could be looked at as a victim, saying, hey, we would have never given you the loan had we known that your credit score was 500.
No,
No. Okay.
no, and I'll tell you why.
Okay.
Because at the time when the person applied for the credit, right?
Yes.
The bank will pull that person's credit score, and even though it's reflecting us improving it,
Yes.
okay, that person has to maintain that credit score for 3 months before they apply for that bank loan,
Yes.
because the bank is looking back at 3 months of credit history statements, the whole nine.
Yes. Okay.
Once the bank makes that decision to give them the mortgage, that's a fixed mortgage.
Okay.
So that's a contract that the bank has entered into with them. The only way that that contract will be broken is if that person, for whatever reason, cannot maintain that monthly payment.
Right.
But that would not fall back on a credit situation. It would fall back on a lack of payment, and it would go through the normal repossession process and so on
Okay.
and so forth. The
Okay.
only reason scenarios like that ever even existed was because of the credit crisis with when Obama administration came in, and
Yes.
they did the credit sweep through all the banks and realized that the banks were actually giving loans not to people not just with bad credit, but people whose income.
Income didn't suffice.
Exactly.
Gotcha. Okay. Thank you.
Yeah. All right. Excellent, guys. So, anybody else before we move on from this section? Any other questions or scenarios? Bankruptcy going once, twice. All right. It's a last resort. We will definitely screen our clients and do the budgets to make sure that that is something that they would actually need. All right. We're going to run through the credit report. I think we have a good understanding on the credit report till we actually see one and start scrutinizing it. So just for, let's see, credit score. Ah, this should be good. Okay. What's your credit score based on? It's very simple. We went through this before. You know, we hear people 600, 700, 800, but what's all that based on? All right. So we hear people say FICA, not FICA, right? FICA is what you see on your check. Go to the federal government. This is FICO. And I'm sure people are like, what does FICO mean? Well, here is your answer. FICO is what's the system that your credit score is based on. It is the Fair Isaac Corporation score. That's what FICO means. Fair Isaac Corporation score. Okay. How do they get to your score? Okay, because that score does a lot. It helps lenders for primarily make the decision on giving you the credit that you asked for. But how do they get that score? Okay, let's find out. And these are the things that you want to know to not just protect your own credit, but also to use it to boost your credit. Number one, you guys identified it. Your payment history is the largest percentage of your credit score. All right. I remember someone, I think it was Jillian and Fern before, yelled out, paying your bills on time. That's correct. All right. Now, if it's a credit card, that means what exactly? Paying your bill on time. So let me tell you a little trick about credit cards. So if your credit card says your due date is on the 25th of the month, you technically have about 3 to 4 days after that before it's considered late. We know that's called your grace period. But if you wanted to buy something else, or you had monies that you just couldn't pay your card bill, why would you not take whatever those amounts are, pay your card, hopefully pay it down to zero, and give yourself a 30-day loan off your own credit card interest free? What do I mean by that? Can anyone explain?
oh, um, because you have a certain amount of time before they charge you interest. So if you pay, if you pay off the credit card, that's on zero, no interest there. Then you make your purchase, and if you pay within the 30 days, there's no interest, so you was able to do that. Yes, no?
Perfect. Perfect. That is perfect. Let me tell you, I do this religiously every month. I would stack whatever monies and put in the bank and and I'm using one credit card. I think I have like 4 cards, but I don't go using this one, that one, that one, that one, little here, little no. I use one card till it's zeroed out. And if it's zeroed out within the same month, the only way I would do that is if I have plans to pay it all off by the due date. Because if I need or have needed to do something, I'm just going to turn around and use that same card or wait till that card zeroes out and registered zero and switch to another card. You follow me? So if you got 2 credit cards, you can use just those 2 cards to drive your credit card score through the roof, simply by stop using cash and use your card for all your little purchases and keep the cash ready to pay at your due date. Every time you pay, you're hitting your score hard. Boom, boom, boom. And now you got 2 cards. So what you do is you sync the due dates, where if you're paid either weekly, great. You sync one due one week and one due the next week. So you're not paying both cards off at the same time. You split up the due dates to match your pay period. How do you do that? You simply call your credit card. A credit card will set your due date to whatever date you choose. You guys were aware of that, right? Yes, no?
Wow, that was crazy.
Yes, your credit card will set your due date. So just 2 cards will drive your credit card, your credit score through the roof if you use it properly. You don't max them both out at the same time unless you can pay them off at the same time. Other than that, you use one, you max one, and then you put that aside, you pay it, you let it sit 3 or 4 days and collect the agency information, let the agency know it got paid and register it to you. You bang out the other one. Now that one is due. You pay that one. You pull the other one back and start using that one while that one is registering to the agency. So now you created a constant rotation on your credit of hits, hit after hit after hit, and every little thing you do. Now the new thing is, if you pay if your rental company, if you rent an apartment or you pay your mortgage, and if your rental company or your mortgage company allows you to pay your mortgage online, okay, that means they accept the Visa and MasterCard logo. That means you can now utilize your rent or mortgage to boost your credit score as well. If you're going to pay them right from your bank account, you're not doing yourself any good other than one good of hitting your mortgage on time. But why not do yourself 2 goods of hitting your mortgage on time and hitting it on your credit card and simply paying off your credit card with no interest? So now your mortgage is jumping your credit 2 scores, your rent's jumping at 2 scores. Do the same with your car payment, pay it on your credit card and jump it 2 scores. Every month you could be hitting your credit card with 6 score jumps. You'll be at 800 in the blink of an eye.
Thank you.
Insider information just for you guys.
Yeah.
Yes,
You just
sir.
gonna that's
I'm sorry, my fault. I'm sorry. Go ahead.
All right. I'm sorry. Did I just do one of those mind explosion scenarios?
yes, it went
Well, very good. Very good. All right. So keep that in mind, guys. You're missing opportunities to explode your credit. Okay? Do not use cash. Do not use your ATM debit card. Do not. Only thing you're using that for is to deposit your money to pay your credit card bill at the end of the month.
Can I add two things to that, Angie?
Please do. I was
Um,
hoping you would.
well, let me say three things. One is I see that the because I spoke with my sister, who's she works with the mortgage company, because I was trying to see if my mortgage company allowed that, because it does allow you to pay online,
Mm-hmm.
but they don't, because they looked at it as a credit card as a debt, and so where you're using one debt to pay another debt, so they didn't accept the credit card as a form of payment for my mortgage, so that was out the door. But a lot of like cashbacks, keep in mind cashbacks have higher interest rates, but if you're paying and zeroing it out at the end of the month, it doesn't matter what the interest rate is, but cashback gives
Mm-hmm.
you your money back.
Mm-hmm.
So for instance, every year I buy a Louis Vuitton bag, but I get it for free. And the reason I get a Louis bag for free, it's not fake. I'm going to the store and buying it. It's because I use my reward points. So I use that card just like Andy is saying, and I make all my major
Mm-hmm.
transactions. So I pay my utility bills,
Mm-hmm.
my groceries, my children's one of my children goes to a private school, and I'm able to pay her tuition
Tuition. There
without
you
it being
go.
a fee. Now,
There you
mind you,
go.
the college accepts a credit card, but they charge a fee, so it doesn't make sense for me to use a card there. I don't get a fee, because then they're charging me more money. So I make sure the transactions don't charge you a fee to use the credit card, because then you kind of negate the whole purpose of utilizing it and trying to get the money back. So I just let it accumulate until the end of the year. And then by the time it's all said and done, I have like $1,500.
Mm-hmm.
Um, and maybe I have to add a little bit more depending on which bag I'm getting. But I have $1,500 that's for free,
Right.
that I accumulated for the entire year. But here's the other thing: a lot of times when we look at the due date, but what you really want to pay attention to is the closing date, because the due let's I'll give you an example. On your credit card statement, the due date might be January 15th, but the closing date might be January 10th. On the closing date, that's the date that that credit card company reports to the credit bureau what your balance is.
Mm-hmm.
So if your balance is $10,000, but you're saying in your mind on the 15th, I'm going to pay the whole $10,000, so it doesn't matter. But the
Mm-hmm.
problem is on the January 10th, they reported to the credit bureau that your balance was $10,000. And let's say $10,000 was your limit. Now it looks like you're utilizing 100% utilization rate. So
Mm-hmm.
now you don't look like a good candidate, even though 5 days later you're going to pay the full amount. It doesn't matter what it shows 5 days later. All that matters is what's reported to the credit bureau, and they're reporting on that closing date. And the thing that affects your that's going to affect your score. Your score is going to drop tremendously. And if you end up trying to apply for another credit card, you might be thinking, I've been balancing my credit well. I pay off
Mm-hmm.
my bills on time. Why am I getting denied? Because the new credit card company is looking at you're using 100% utilization,
Mm-hmm.
because it's not reported once you paid that 15,000, that 10,000 on the 15th,
Right.
because
It's
that came
reported on that.
after. Yeah,
Right.
it came after the closing
Mm-hmm.
date.
So there's three dates that you guys got to be very aware of: closing, the due date, and the last date is the grace period end date. All right. So those three dates will determine your credit score and how it moves up and down. So controlling your credit score is making your payments on time, yes, is the biggest factor. But even making your payments on time is broken down into those three subcategories based on the dates: the closing date, the due date, and the end date for the grace period. Those three dates right there will kill your credit score if you don't be mindful of them. All right, excellent, excellent. All right. Any question, guys?
I mean, not to take us too much off, maybe we can build on this a little bit later, but the sister, I mean, that's very interesting because I'm just like, I mean, if then what the hell? What purpose is the damn due date? If the real credit value is based on the closing date, then I mean, like,
Yeah. Well, that's because the credit reporting agency, they have a cutoff date every month that they update the files.
mm,
Whether these companies, send them the information or not, they're going to report on whatever they have in their system. So some companies might even miss a report. So it's simply going to have whatever was in there from the month before, and then it's going to jump and catch up on their report the next month. So they're going to put it in based on the date that the reporting company cuts them off. But their due date is based on, like, when did you open the account? You might have not opened it at the first of the month, making your due date the 25th. You might have opened it the second, third, fourth, fifth, making your due date even further up, or whatever the case is. So the due date could fluctuate, but it's up to you. However, you can call and adjust your due date. Remember, we were talking about that.
mm-hmm, mm-hmm,
That's
mm-hmm.
part of your power. So if you're aware now and you say, well, hell, I'm more concerned about the closing date than the due date, but the closing date is this date, then you can call and say, can I have my due date be this date? Whether it's the day before the closing date, or the day of the closing date. You can do it that way.
I see. I see. Okay. Very good. Uh, Overstood. Let's go.
All right.
hmm hmm
Excellent. Excellent. Okay. So now, the FICO is a primary method used to assess how deserving you are of their credit. A FICO score is calculated using a computer model that compares the information in your credit report to what is on the credit report of thousands of other customers. FICO scores range from 300 to 850. Okay. In most cases, however, if you have a FICO under 500, I don't think it shows up. I think it shows up as not having a score, or not an insufficient credit. Okay. In our exercise on the last one, we went through a couple of things. One of them I'd like to point out is the length of your credit history, right? How long have you had credit? You see that bullet point number 3 down? Anyone see
Yes.
that? Okay. So they rate that as 15% of your score, which is very significant. Outstanding debt 30, past payment, I'm going up by the way, past payment history 35%. But that 15% becomes significant when a creditor is looking at it, because depending on the credit that you're going to get, if you have not had a long history of credit, some creditors, even if your credit is good, they can deny you credit simply because you have not had a long enough credit history. Has anyone ever heard that denial?
No, I haven't.
Okay, I've heard that for clients, particularly business clients who needed, let's say, 50,000 or more, but they only started their credit history maybe a year or so ago, and all they have are credit cards. Okay, a bank or a lender will tell them they don't have enough credit history to get that loan, because they don't have a track record of having an installment loan, like a car note or mortgage, or even a lease. Like if you have a commercial lease, it shows up on your credit. So those are things, depending on the type of loan you're going for, all these things come into play. Your payment history, absolutely. outstanding debts. Absolutely, because that weighs towards your debt to income ratio. That will get you denied a loan also. If your debt to income ratio is not it can't be balanced, can't be 50-50. It's got to be like 70-30, 60-40, okay. But anything above that, chances are you're risking not getting the loan. We just talked about how long you had the credit. New applications for credit. What section of your credit report does new applications for credit go under? What is that actually called? If you go into T-Mobile and tell them, I want a phone, they say, give me your social. They run your social. They come back and it says, we need $500 deposit from you. You say to T-Mobile, oh, I'm not giving you $500. Let me go next week. Let me go next week to Sprint. You go to Sprint. They say, let me get your social. You give them your social. You say, no, I'm not paying $600. And the following week, you go to Verizon. Verizon says, give me your social. You give them a social. They run it. They say, okay, $550. So you say, okay, you know what? I'm going to go with Verizon. All right, so now all of a sudden you go to check your credit score a month later. What will the impact be of those 3 visits on your credit?
I saw it's just as one. It'll impact it one time, but it's like you were shopping around for the same thing. I saw that in there. So
Mm-hmm.
it's not gonna give you like 3 hard pulls. It'll be like one.
Okay, but put me in a timeline here
Within 30 days?
of what's now. Remember, your calendar month has an end date, as well as there's an end date to reporting agencies, a closing date that all companies must report to these reporting agencies by. So if you stopped at your first location on the 15th of the month, you stopped at your second location on the 22nd of the month. By the time you got to your third location, it's the second and third of the next month. What
Then it
would you?
counts as 2?
Right. So based on how you visited those stores and the time frame and the time of the month and the reporting dates, and you see all these things are playing against your credit.
Okay.
Okay. It's like if you're gonna do it, it's best to do it all on the same day,
Okay.
because then you don't have to worry about the calendar and where you fall in that month.
Right.
Okay. And also when you go on the same day, guess what else doesn't happen?
Right.
Their previous inquiry hasn't hit yet, whoever you
Oh,
stopped at
right.
before.
You're right.
Right. Okay, I'm sorry, good brother. Let me just go on and deal with this real quick. All right? So, okay, I can see the time variable. You're saying, hey, if you so one variable is the amount of days in between each credit pull. And
Right.
so if you got too many close together, that count against you.
No,
So
no, it won't count against you.
okay,
Remember,
okay.
if you're in the same category, and let's be category specific, right? So
Mm.
if you're looking for a loan from a bank, and you say to yourself, I got all my papers, I'm going to this bank, and this bank, and I'm going to them all in the same day, right?
Right. Mm-hmm.
So
You knock out one variable. One variable is
that's
uh,
one variable for all
one
3
variable,
banks.
right? The amount, since it's all on the same day, you don't get that in between. You had X amount within this particular time frame because it was all done on one day.
Exactly.
Right. So I catch your I caught that point. It's just interesting how like you got these 3 variables. You got the time variable, you got the closing date variable, and the amount of inquiries variable. So
Yep.
you got like these 3 variables working. And so I guess the amount of variables you can cancel out increases your probability
There you go.
of
There
getting
you go. That's
whatever credit
exactly right. And in order to be able to cancel them out, you got to know what they are.
you got to know what they are. Yep,
Yep.
indeed. Mm-hmm.
Very good.
Overstood. Got it. Mm-hmm.
Any other questions?
No.
Okay. All right. So we talked about the FICO, right? Now, before I go down and show you Vantage. So FICO, by the way, is the industry standard, right?
Mhm.
That's what banks use, finance companies, credit cards, all lenders use FICO. So what is this? What is
I
that?
I read it, but I don't know. I've never seen it before, or I
Okay.
never paid attention before.
This just came about. If I don't know the exact year, but I want to say last year because I remember reading something in my like my credit card um was informing, they was trying to explain that this new Vantage score is going to go up to 900. So now if you
Mm-hmm.
see 800, it's not as big. Under Vantage score, it's not as big as, we think, oh, we're all the way up there. It's like, oh well, no, it actually goes all the way up to 900. And um and I remembered, but I can't recall right now, but I remembered they were explaining the difference and how this was going to, how it could positively affect some, but negatively affect others. But
Mm-hmm.
I can't, I don't remember. But it's new, Jillian. That's why you don't remember it because it's relatively new.
Right. So
Okay.
is one take of that? It's going to take over the other, or we're gonna have both now?
Well, the argument in the industry is that Vantage is too too easy to gain your to drive your score up,
Mm.
Okay.
right? And so the industry leaders like the car industry, the banks, and so forth, they don't want to accept the Vantage score. They don't pull reports that deal with Vantage scores. So this Vantage score is now being utilized mainly by algorithms like, drum roll, one of my favorites, Credit Karma.
Credit cards. Okay.
Yeah, Credit Karma uses them. Also, okay, simplify it. There are three major credit bureaus, right? They only update once a month. Everybody else, Credit Karma, you can check them twice a month and they're going to update, I think, once a week. If they update once a week, they're using Vantage Score because they are pulling from things that the other credit bureaus wait till the end of the month to pull from. So when they're pulling from it every day, they're just adding things to your score and driving it up, which is why they needed to have it higher than the 850. It really should have been 999 instead of 900, but they wanted to at least stay resembling the standard, so they made it 900. But real banks and financial institutions will not use this score. It will only be used like online services. Like sometimes some certain credit card companies, like they have a thing called Credit Wise and all those things where you can look and see your credit score. They're going off of the Vantage score. Now, when you use Credit Karma, if you compare your credit score against the same credit score from not on the website Credit Karma, but on the Equifax or TransUnion website itself, your score will be different. So Credit Karma's Equifax might say your score is 750. But when they pull the real Equifax, your score could be 725 or 765, but it won't be the 750 that Credit Karma has because they're not the same. Did that help a little understanding of Vantage? It's a different credit system that's being used by industries other than finance. And let's see if they
So
maybe they
I'm
told us.
sorry, real quick. So you said so apps or companies like Credit Karma and people and other companies that can give you a more immediate idea of where you sit with your credit score, they're factoring in the Vantage score.
Yes. And
For
Vantage scores algorithms are based on assumptions. It's based on assumptions that since you paid your last 3 payments on this date, there's no reason that you're not going to make the other payment on time on that date as well. Or if you made it late, it's going to assume that why am I going to, assume that you're going to make it on time this time? It's going to assume that you're late and bring your score down a little bit more. So that's what the Vantage does. It's a lot of assumption, whereas the FICO waits for the facts to come in.
Got it. So my question is for because I haven't gone to which I haven't gone to annualcreditreport.com and gotten my official, but I am with Credit Karma.
Mm-hmm.
And my question is, have any of you all gotten your reports back from annualcreditreport.com and saw a difference between that and Credit Karma?
Great question. Anyone did a comparison yet?
No, I haven't.
Do you have Credit Karma on your phone?
No.
Well,
Okay.
I didn't go to the annual, but like my credit card companies let me get like my Experian and TransUnion for free.
Mm-hmm.
And my experience has shown me, and so I get to see the credit score,
Mm-hmm.
and my Credit Karma score tends to be higher
Mm-hmm.
than the other scores, and I mean like a, a big
Yeah,
difference
like
higher, not
30.
like 5, right?
Yeah,
Right,
like
like
30.
30.
Yeah. Yeah, that's what I'm saying. Like, yeah. I mean,
Wow.
yeah,
So it's
always.
almost like they're off. So really, Credit Karma is kind of off.
Right.
Yes, I will always tell you, okay, so I do advise that you download Credit Karma, but not for the score. You download it to track and monitor your credit to make sure nothing new pops up on there that you didn't authorize.
Mm. So is it just that the annual report, the annual credit card report, but since they report like once a month, they're actually late, and that's why the difference is there
Well,
is because I'm
we
sorry.
won't call them late. They wait till all the information is reported, and then they file. So in order for them to be accurate, they set a date that they do that. And all the agencies that signed up to report to them know this date and know that they have to report to them by this date. Whether you make your payment or not is irrelevant. They're going to report.
Hmm. Wow. Okay, great. Thanks for answering that question. Mm-hmm.
All right, that was a great section right there. All right. So we already talked about the fact that inquiries will hurt your score. If you have to make inquiries, plan your inquiries. So for instance, I am gearing up right now, as you guys know, to do the paperwork for the building here in Michigan. I'm also Keisha. We need to also talk too before the trip even down there, so I have an idea of what I need to do for that project down there in Georgia. But there's a lot of things that's coming up that's going to require the credit of not just the business, but the officers of the business. So I'm making sure I'm on top of my credit score and I'm on top of my debts and everything. And I had an interesting scenario today as I'm doing my end of month scan, which I advise everyone to do. I just discovered, because and we all do this, so please check your finances as well. I just happened to have paid off all my credit cards, right? So I'm waiting to see, what's what, and I'm doing my tallies, I'm checking the boxes, and I see this amount on one that I said, well, if this card is supposed to be at 0, why is this amount on there? Come to find out, there are these companies like Audible is one, and if you click on their website for some reason and your computer has your information stored, you can have a subscription from these companies that you didn't even authorize. So for some reason, Audible had been hitting my credit card for this minuscule amount that I would not have noticed if it wasn't the only thing on my card. So $14.99 every single month have been on my card. I never noticed it because I just go paying. I'm thinking it's maybe whatever, whatever. So now my credit card company has had to go back in its history almost a year to credit me for all those $14.99 hits.
Wow, dang. I mean, it's interesting that they're actually going to do that, because isn't it like...
Well, the question is, what's in your wallet? And that statement holds true, because if you have a what we call a generic credit card company, they're not going to do that. They don't care. They just want their money. But if you have a reputable company that's going to stand by their product and stand by their customer, more importantly, then you can dispute that.
So simply because you're saying, hey, I never really went through the process of ordering Audible, they're going to be like, oh, okay.
Yeah, but
Andy,
they're gonna do their investigation. They're gonna call Audible, and Audible has to provide them with not just that, whether you signed up for them or not, but what subscriptions did I take from them? What books did I order from them? If Audible doesn't have where I took a book from them or anything, but they've been getting this thing every month, what am I paying for?
Right. Wow. Yeah, I better do a monthly scan. Right?
Do a scan, because it's the little amounts that slide by. Very important, guys, that you stay on top of your credit card bills, because if you shop online, this is that time. Companies are hungry, people are hungry, scammers are hungry. Protect your credit. Do a scan. That's the only reason I recommend Credit Karma, is just so you can monitor your account. It doesn't matter how many times you log into Credit Karma, it does not affect your credit score.
Overstood.
All right. So let's do a couple of quick exercises here. Let's see what we've learned about protecting our credit and credit risk, right? What we're going to do here, we're going to read the profiles of each person who wants to apply for a loan. And then we want to determine if this person is a credit risk or not, and be ready to explain why not. So everybody's just going to take one person, read their scenario, and give me their explanation, right? So let's start with Bob. Who wants to do Bob?
Me.
All right, let's go, Jillian.
Bob applied for a loan and has no credit history. He works and saves his cash, but never opened a savings account. Do you think Bob poses a high risk to the lender? And I put yes. And the reason why is because the lender doesn't know Bob's repayment history. He has no nothing down on paper for him to know if he's good at paying back or not.
Yep, but there's also a big red flag that a bank will not lend you a loan unless you have it. He doesn't have.
Because he's old, and old people don't believe in our banking system.
Who said he was old?
I'm just kidding. That's
Wait. I'm sorry. Did I read the same question she read?
No. I'm making a joke because older people are like, we don't trust that. You can't put your money in there. You're not gonna get it back out. I work for Medicare, so when I used to hear that shit with Medicare.
Well, you know what? I also know old people aren't asking for loans either.
Some of them do.
Sure,
right.
they're gonna
You're right.
ask their
Right.
son or daughter for a loan.
You're right. What's the other reason?
If you don't have a bank account,
Right. You can't.
Ah.
You're
Mm,
right.
you
Okay.
can't get a loan without a bank account.
Right.
mm.
All right. So when number one with our clients, when we do our check, you notice if you haven't reviewed the intake form, one of the questions is, do you have a bank account? Because if they don't, that's one of our first obstacles that we're going to get them over is lack of trust of banks. And of course, you know, you don't just get them over it by saying get over it. We've got to find out what was their experience. What is it that caused you to have this experience, dislike for banks? And then we're going to agree with them because chances are we've had that same experience too. But we also had to take another chance and find the right bank that matched our needs.
Right.
All right. All right. So excellent. Excellent. Who wants to do EDA?
That's an easy one, but
Well, let's start with pronouncing the name first.
right.
Because I don't think it's
Ida.
Edda. I think it's Ida or something.
It's not Edna.
It's not Edna.
You over here thinking about your sister.
Right.
Oh, wait a minute. You talking about my sister? All right.
Edda, you think about Edda.
Let's go. Who's going to take Edda?
I'll take it
Sure.
since we're
Yeah,
okay. Go ahead. I'm sorry. Go
Well,
ahead, Kenya.
I should probably let my sister take it because well, I'll take it. Oh, yeah, I'll take this one. Okay, all right, here we go. Yep. So I'm going to say it's a no. All right, she's
You got to read
late
it.
on her.
You got to read
No,
it.
all right. Okay, all right. Right. So Ida has been late making her car payments. That's a no. Okay, and recently stopped paying them altogether. Oh, that's a double, triple fat goose no. She also has a tax lien on her house. Do you think Ida poses a high credit risk to the lender? Of course. Okay.
Okay.
It's just there's no proof of there's no proof of accountability. Yeah,
Yeah.
reliability. Yeah. So reliability is low, and I'm sure that is not going to make the lender feel secure.
All right. So now let's explore Edda for a minute, right? If Edda came to you and explained all these problems to you, first of all, what do you think is the next thing she's going to ask for? What type of service you think she's going to want?
Credit repair.
Okay, but look at her debts.
She's gonna want to speak. She's gonna want to stop her car from getting repossessed.
Yes.
Yeah, that's for sure.
And she's going to also want to stop her house from being repossessed. And
yep, you got a tax lien there. Yep.
So what service, even though we may not like it or like to offer it, what service would exactly?
Yeah.
That's
Chapter
really
7.
the only thing that would stop that. And then we would have to do what to make sure she qualifies?
Make sure that she has an income.
Right. Find out what her income is like. Do a whole budget for her to see if she can actually dig herself out of this without bankruptcy, because the same test we do and apply is the same thing that the court's going to do. They're going to want to dig and see, can she actually make these payments and pay it off? Even if we have to give her chapter 13, you know, can she make it in chapter 13? We reduce this, reduce that, and give her, 5 or 10 years to pay it off. Can she do it? So we would
she's probably not even going to qualify, at least for the one that requires an income, because if she is late and she want to stop making her payments altogether, that's somewhat of an indicator, a pretty strong indicator.
You're making an assumption. You're making an assumption.
I am.
Never make that assumption with a client. Okay. Never. And I'm gonna tell you why. Because a client, their order of importance is based on emotions and what's going on in their house at that time. So until you've had that conversation as to, hey, Edda, I see what's going on here. But what brought you to this point? Are you working still? You know, that's the first question. Are you still working? And if the answer is yes, then let her tell you what brought her to this point. Because chances are, it's
She's like, man, forget these bills.
yeah, it's going to be something dramatic that happened. And then you, as a financial counselor, should then be able to say, before you go into the realm of bankruptcy, are there any services out here that can help her catch up? Because remember, even though you're working, you still qualify for social services in times of emergency.
Mm,
So
I
one of
see.
our exercises, the very first homework, was to find out what was the qualifications for Medicaid and Medicaid services in your area. Remember that question? Because Medicaid and all these social services, they have programs for even homeowners. You can own a home and get emergency services from one of those HRA organizations and family services organizations, depending on the state you're in. They all have a different name, but they are there. These are federal programs designed to help homeowners, designed to help families, designed to help single mothers and single parents and children who are emancipated. There are tons of money in these programs for our clients if we know where to find them. So that's
Mm,
why bankruptcy, even in this scenario, may not be the answer. Because if she's a mother, if she's a single mom, if she's got hit by COVID or something, or there's money out there that can dig her out of this without sacrificing her home or her car. And it would just simply be a matter of now going to court, presenting these situations, presenting these hardships, as well as a plan for our client to get out of this hardship in a reasonable and respectable amount of time with the help of the various social services. The courts would reject it or put it on hold until such time that we can prove that this plan either worked or did not work.
I gotta. Okay, so I'm with you, brother Andy. So if I'm catching this, because there's another variable that's unknown, which is depending on what kind of economic cycle we're in, right? So
Yes.
so all of these programs become so much available when the economy is stressed versus when the economy is up.
Mm-hmm.
And so I was going to say, so because bankruptcy is the last thing, so after a while, when we're assessing a client situation, like we'll begin to pick up some immediate indicators, be it income, like
Immediate.
immediate,
Immediate. Yes.
income, tax situation, this, that, and
Yep.
the other. And so based on our familiarity with probably I don't know, maybe there's a good 20 or maybe 10 programs, we'll immediately be able to be like, oh, okay, like by going through the scenario, we'll be like, okay, they might be good for this, that,
Yep.
this, and then after we've exhausted those options, then we can say, okay, maybe
Yep.
now we should entertain bankruptcy.
Exactly.
I'm with you. Overstood.
Exactly.
Mm-hmm.
All right. So we may have just saved Etta's house and her car. So congratulations, guys. That was great analysis there. All right. Who wants to do Jelani?
What's baby girl who's gonna catch my question? Where's she at?
Oh, Keisha.
I have food in my mouth.
All right, go ahead.
Okay, Jelani, I got it.
Okay.
Jelani took out a car loan last year. He has been making the payments on time and has a good credit history. Do you think Jelani poses a high credit risk to the lender? No, he does
Excellent.
not.
Excellent. Jelani would be somebody that would be able to get another loan, but what could stop Jelani from getting another loan?
His debt to income ratio.
There you go. Woo, look at you, Key.
Oh, look, baby girl, she with it, man.
That's what I'm talking about. Very good. Very good. And somebody other than Keisha, tell me, how would that come into play in this scenario? Just by reading that question, how would she know that?
Well,
Still has
he's
high car loan from last year.
Yep, he's only been in it for 1 year, and we don't know, but just from his name, he sounds like he's pretty fancy schmancy.
His name. God, his mother gave him that name.
See, you like that assumption, right?
Hey, right.
See what
Right.
assumptions will do to you?
Right.
That's what I was gonna get you on, brother. And I'm like, you making an assumption.
All right. Let's hit Miranda real quick. Let's see what Miranda got to say for herself. Who wants Miranda? I got 7 people on here. I'm here.
Spurs still on here. Where's Dean?
Yeah, I got
listening in action.
Chris. I got.
I'll do it. I'll do it. I'll do
Okay.
it. Okay, so Miranda's son, who is 19 and working, would like to get a credit card and promises to pay the bill on time. Miranda agrees to co-sign for her son. Several months later, she finds out he has been making late payments.
Woo! This is interesting. Okay, so Chris, read that first question. You're gonna get some help on this one.
All right. Do you think Miranda poses high credit risk to lenders?
Okay,
Why
stop.
or why not?
Stop right there. Notice. Whose debt is this really?
The son.
Okay, that's what
So tell me what
you would say, right?
But
Who
it's
else-
not.
who-
Because she co-signed. She co-signed for him.
Hold on. I'm gonna ask the question again. And now you're gonna think, whose debt is this really?
The mother.
That's right. Why?
Because the son didn't have any credit. She put it as so that he can build his, but it really it falls on her.
Mm-hmm. So
I'll beat the crap out of him right now.
Well, that goes back to our scenario of when we take this scenario and move it into our company scenario where we are gonna attach people to help them build their credit.
Nice.
You have to do something like this with safeguards attached. So if the mother is going to give her 19-year-old son her credit to buy a car, what's her responsibility?
That she has collateral beforehand.
That's number one, that he gives her some monies every pay period or whatever, just in case he misses a payment. That's number one. But number two, she has a responsibility to watch that payment on her credit.
Right.
Yeah, because I'm like the other piece, we can't, well, I mean, we can suggest, but we can't implement, a monitoring program inside their situation, right?
Well, if they're our clients, we can.
I mean, hold on. You understand what I'm saying? It's almost like me saying, okay, look, so in order for us to help you out, you got to make sure. And then what we gonna do? What?
No.
Call her,
No, you don't have to do nothing. What you're gonna do is when a client signs up with us, part of everything that they're signing up is saying that they're giving us permission to monitor their credit. So if it's their credit, yes. And if it's your client and they're paying us a monthly fee, whether it's XYZ a month, to monitor their credit, to clear up their credit, to do all this stuff, that means once a month, you will touch that client's file, you will pull up their credit to see what actions were taken based off of your previous actions and so on and so forth. So once a month, you will know if anything shifts with your clients.
Right. Yeah, I was just saying like, because it was posed that, what are we going to do? We're going to make sure that, that she makes an agreement with her son that he does da-da-da-da. And I was thinking like,
absolutely.
You could pose that, but it's really difficult to try and monitor what she does.
Yeah, but what she should have done, if that's her son and he's making payments, like we said, one, set it up where even better yet, say, hey, look, to make sure these payments are made on time, give me the money. And I will make the payments until you can take the car out of my name and fully into your name, refinance it As soon as in 6 months, when your credit is strong, we will refinance this car out of my name, strictly into your name, and then you no longer have to do it that way. But as long as it's in my name, you will give me X amount from every paycheck, and I will make that payment.
Right. Another thing I was thinking is, you know how when you get an apartment and you have to put a deposit down?
Yes,
Well, it's like, listen, let's say the car payment is $500.
yes.
I need a payment in advance.
Well,
So
that's the
I
first.
need
That's right.
$500, and
That's right.
then you pay me $500 upon a due date, so that in the event you have some dire
Yes.
circumstance and
Yep.
you don't pay, I still have this $500.
That's exactly right.
I'm not digging into my wallet. But this
That's
is
exactly right.
definitely not to be used for you to skip a payment and say, "Hey, remember I have a balance with you."
Yep. Yep. And and that's exactly how you would counsel that client. You would tell that client just that you are jeopardizing your credit unless you do this in this order. And if she's or he's your client, then you can go ahead and create that bank account or whatever that situation is that they need to operate. And that client would just think that you just made their whole world so much easier to maneuver.
Mm, mm,
Okay. A lot of times it's not what we do for the client, it's simply how we package it. Because chances are they've already got all the tools they need. They just didn't have the information that you will have to package it to make it work for them. And what I mean by that is if they're working, they have a home and a bank account. Those three factors right there, you should be able to recreate that whole financial structure for that client. And to do that, you're gonna have to change the way they think about their finances. And with every single client that you meet, you have to first know how they think about finances and then change the way they think about finances. Because usually that's the reason they're in the situation they're in, because they haven't thought their money through and utilized it in the right way. I always tell people, if you're going to put money out there, make sure you looked at every angle to safeguard it on its way back. How is it going to come back? How is it going to be protected coming back? And do I have protection after I let it go? Is there any protection? So you got to know the circle you're in and make sure that you feel comfortable with it. And you've got to also know that, there's things that's tangible for you, whether it's an agreement or it's just something that you feel comfortable in that scenario, because it's a lot of scenarios out there, but they're not all for you. They're not all for your clients. And you've got to sometime advise your clients that, hey, I know you want to go this way, but I'll never tell you no, but I will tell you, let's dig into it. Let's make sure you know what you're getting into before you get into it. Because once you pull the trigger, that's it. It's really no coming back. The money is out the door, or the funds, or whatever it is. You want to do your homework before you do that. So think of yourself as you're listening to your client's stories. How would I want to have this scenario handled for me? And then you should be just fine with your clients. All right. So who would be a greater risk to a lender, Miranda or her son?
Her son.
Really?
Both
Oh
of them.
no, so I'm sorry. I'm sorry. Yeah, you're right. Her.
Think
Miranda.
about it. What does the bank have on her son?
Nothing.
That's correct.
It's
Once
only
they
the brand
once
that
once that car is going out of his name, he can start with another credit card or whatever, get his own credit and go back out and get his own car.
He's stuck with it.
But Miranda, what's going to be her scenario?
she gets bad credit. She's the one who's gonna get penalized for everything that the son did.
That's right. Because when she co-signed for him, she, in essence, took his place on the loan. If there's a problem, I'm responsible. That's what co-signer means. All right. So the bank knew he did not have credit. They were not concerned about him. They knew they had her signature agreeing to take on the loan. And that's what's important to the bank. All right.
So in truth, the son wasn't a real consideration anyway. It was
No,
really, it was really the mom. So
absolutely. Absolutely.
okay.
It's like sending your child off to college and he wants to live off the dorms. Well, a renter is not going to rent a room or an apartment to your son at 17, but they will rent that apartment or room to you, the parents, for your son. So whether your son gives them a check every month doesn't matter to them, as long as you, the parent, have the ability to write them a check every month if they need it from you.
And this is the whole purpose of a cosigner.
That's
Yeah.
the
So
whole purpose of a cosign.
cosigner. Yeah. Mhm.
All right. You guys already know how to get a free annual report. You already know that. Awesome. All right. Okay. I'm gonna skip this. You guys get all kind of telemarketing and advertising because y'all know how to. Well, do you guys know you can opt out of receiving credit card solicitations and all that stuff? You do know that, right?
After reading this, I do. Thank you.
Oh, okay. Yeah. Yeah. I mean, what happens is they count on you not opting out. But once you opt out and you go this route, if you continue to receive those solicitations, that now becomes harassment.
Mm.
And guess what you could do with harassment?
Lawsuit.
That's right. That's exactly right. That's part of this whole thing with these telemarketers. What's got them going crazy with these robocalls and everything right now is because they don't want to get caught up in the mailing federal stuff. So over the airways, as long as they meet their time frame for each time zone, because that's what the federal government did. They instituted times that telemarketers can call. You should never receive a telemarketing call after what, 9 p.m.
It's
Eastern
9.
time.
Oh, that's late. 9
Yeah.
p.m.
It's 9.
It's 9, right?
Yep, it's 9.
Yep. Okay.
Damn.
I'm sure I got one of them before too. I was like, man, what are you doing calling me 9 o'clock at
Well,
night?
if you got one after 9, I recommend that you be as polite as possible and talk to them and try to get a real person and get that company's name and get that person's name and get a follow-up number, and then you contact the Attorney General. All right?
Okay.
That's how you solve that, because once the Attorney General gets that, they give you the permission to file a lawsuit.
Nice.
Understood.
All right. This is annual credit report. This is if you wanted to do a written request. Okay. She wants to. Oh, nice. We don't need that question. Is it time for home? Can you her report include both her and her husband? Oh, this is a good question. Okay. So Maria's applying for her home loan with her husband, right? Can she get a credit report that includes both her and her husband's credit information together as one?
I don't
No.
think so. No. There's information that will be on her credit if they have joint accounts, but it'll be her account and his account, but no, not a joint account.
Very good. Your credit is specific to your social. And even though you may share credit with that person, it will only have your information on it. It will, however, tell them that you're married, that you have a spouse. And then when they run his credit report, it will have his information overlapped with your joint credit, and his report will say he has a spouse. So, very good. So next question, Maria and her husband decides to shop around for the best price on a home loan. Several lenders pre-qualify them for a home loan. Maria realizes that each time they got pre-qualified, the lender requested a copy of their credit reports. Should Maria and her husband be worried about these inquiries affecting their credit scores? You guys already know the answers to that because we just spent time on it.
Yeah.
Okay, very good. All right. So now we're going to take a look at the parts of your credit report. So when you look at yours and clients, you're aware of what you're looking at. But you know what? I didn't realize we're over our time. Okay, guys, today is Monday. I really want us to run through all this stuff quickly, so I'm gonna let you guys choose the next day. I am here whenever you guys say so.
So.
Okay.
You want to say Wednesday?
Wednesday, I'm in class.
Okay.
Well, it depends on what time. No.
7.
Yeah, let me just stay consistent. No.
Or
Any
you
other
want to move, or up later, or Thursday, or whatever you guys say. You guys, I just like to set a date before we end.
Can we do
night.
Thursday? Is everyone do Thursday at 7?
Thursday's fine. Whatever you guys say.
Thursday. Thursday's
Yeah.
good.
Thursday at 7.
Yes.
Yeah.
Okay. Thursday at 7 it is. We're gonna continue here and run through the rest of the book. Okay.
All right.
And Andy, all of these are recorded as well, right? Just in
They
case.
are recorded, yes, and I'm gonna
Okay.
upload this in the last one and then send out the link to everyone on the site, including you, Keisha.
Thank you. I was going to
Okay.
ask, outside, for those of us that have already completed this booklet, is there anything else that you want us?
Oh, yes.
have?
If you
Okay.
have completed the booklet, please let me know in the email, and then I will send you the next module.
Okay. Can you send it to me?
That's excellent.
This is
I really appreciate it. So you guys that that haven't finished this module.
I'm not going to be behind. I'm getting ready to finish the book tomorrow. Right?
Okay. So then you know
Andy,
what? I'm just going to send out the next module to everybody.
That works.
Okay.
this was the one sent out the other day, correct?
Yes. This is the
Okay.
one from the other day. So
I gotta finish it then.
tomorrow morning, I will send out the next module to everybody. So by the time we meet Thursday, we should all be done with this one. I'm just gonna ask, is there any sections in the rest of this booklet you guys want to address? So if there's a particular section you want us to expand on in this booklet, highlight it for yourself. Make sure we touch on it Thursday before we start the new module, okay?
Sounds good.
All right. Excellent,
All right.
guys. Thank you
Good
so
night,
much. It was
everyone.
great
All right.
session.
All right.
I will
Awesome,
talk
y'all.
to you guys soon.
All right.
Later,
All
y'all.
right. All right. Peace.